In this short video, I'm going to walk through a small sample of some possible employment benefits and discuss whether or not they'd be taxable and how the CRA came to this decision. Now, just keep in mind that once in a while throughout the video, I reference some links. Of course, you can't link anything through the video. I was unaware of that when I originally made the video. So no links are active here. However, any referenced materials should certainly be searchable very easily within Google or your favorite search engine. Thanks.
Let's take a few minutes now to perform a quick research task. Using the link provided to the CRA's Taxable Benefit Guide, determine which of the items listed, when they're provided by the employer, would be considered a taxable benefit and included in income. Please keep in mind, this is in no way a comprehensive list of the possible taxable benefits. Have a look at the textbook if you want some more examples. So what we're going to look at is uniforms, professional dues, parking, private health insurance, and the use of a company car. So for each of all the potential benefits listed here, explain why the CRA has ruled the way they have. Go ahead, pause the video, look each one of these things up, and come to a decision. I'll wait right here. Oh, hey, you're back. So what did you find out? Let's see if we're on the same page, all right? So we'll start with the uniforms. If your employer provides you as an employee with a uniform, should the value of that uniform be included in your income and then taxed? So let's think about it before we do some research. Think about who benefits from having that uniform. Does the employee or the employer? It's kind of hard to make an argument that the employee personally economically benefits from being provided with a work-related uniform. This seems more to the employer's advantage. But what does the CRA say about it? Well, the employee does not receive a taxable benefit if either of the following conditions apply. If the employer supplies their employee with a distinctive uniform that he or she has to wear while carrying out their employment duties. Or if you provide your employee with special clothing, like safety gear, designed to protect them from the hazards associated with employment. So what about if you as an employer pay an allowance to your employee to go out and buy the uniform that they need? What about that money? Do they have to include that in their income? This amount is actually considered to be a reimbursement of expenses, and therefore it's not a taxable benefit. So what about professional membership dues? For example, I'm a CPA, and every year Camosun pays for my membership dues. Is that value, which is, give or take about $1,000, is that included in my income? And do I have to pay tax on it? So again, we have to think about who benefits here. My job is to instruct students in accounting and taxation. Without paying those dues, I'd no longer be a member in good standing. It's possible that some students would question my qualifications. It's actually also a condition of my employment here at the school that I be a member in good standing. So it's pretty easily argued that my continuing to be a member of the CPAs benefits the employer here. As long as the employer is the primary beneficiary of the payment, there is less benefit for the employee, and that's me. Whether the employer or the employee is the primary beneficiary here is definitely debatable, but you need to be prepared to make an argument either way and make a decision. So it's ultimately up to the employer to determine who the primary benefactor is, and then they have to make the appropriate decision about income inclusion. The employer must be prepared to justify their position if the CRA decides to challenge them. In all situations where an employer pays or reimburses an employee's professional membership dues and the primary beneficiary is actually the employee, then there's a taxable benefit for the employee. So for example, if Camosun College paid for my annual membership dues at the curling club, that clearly has nothing to do with my employment, and the benefactor here is totally me. The college doesn't benefit from that in any way. So in this case, the amount of the dues for the curling club would be included in my income, which of course, hey look, I'm still happy because otherwise I'd have to pay for the dues myself. On this case, I just have to pay a little tax, which is a good deal for me. So what about parking? Surely I don't have to include this in my income if it's provided by my employer. So the answer here can actually vary. You got to consider who benefits. So here at Camosun, I actually get provided with parking for the few days that I do drive to work. Turns out that the employer provided parking is usually a taxable benefit for the employee. Doesn't matter whether the employer owns the lot or not. The amount of the benefit is based on the fair market value of the parking minus any payment that the employee makes to the employer to use that space. If the employer can't determine the fair market value of the parking, then they can't add a benefit to the employee's remuneration. So this could happen in the following situation. Let's say that a business operates from a shopping center or an industrial park, something like that, where parking is available to both employees and to other people, customers, etc. An employer provides scramble parking, which is when there are significantly fewer spaces than there are employees who want parking, and the spaces are available on a first come, first service basis in this case. So sometimes an employee gets a spot, and sometimes they don't get a spot. At this point, it's almost impossible to assign an annual fair market value, so there is no benefit that can be included. It's worth noting that if your employer provides enough parking spaces for all their employees who require parking, but they don't actually assign the individual parking spaces out to the individual employees, this isn't the same thing as scramble parking that we described above. The employer has to add a benefit to the employee's remuneration at this point if they offer this type of parking. There is no taxable benefit for an employee when both of the following conditions are met, though. For one, the employer provides parking to the employee for business purposes only, and the employee regularly has to use their own automobile to do their actual work duties. Again, worth noting here that travel between work and home is not considered travel for business purposes. That's just the way you get to work, and it's not considered business, it's considered personal. So sometimes determining whether or not there's a taxable parking benefit can be a little tricky. So make sure you provide a solid argument and make a conclusion in these cases. So what about private health service plan premiums? My employer, which is Camosun College, pays premiums to Manulife on my behalf so that I have an extended healthcare plan. They also pay into a dental plan for me. Clearly I benefit from this, as I would otherwise have to pay for the premiums myself or pay directly for the drugs, for the dentist, whatever. So, is this taxable? And the answer flat out is no. Employer paid premiums for private health insurance are not taxable benefits. This is something specifically exempt from inclusion noted in the Income Tax Act. And there are actually several more specific exclusions, or what we call non-taxable benefits, that are laid out in the Income Tax Act and described in CRA documents. I'd advise that you make note of the more common ones. So, what do you think? Is this good? Of course it's good. I get benefits paid for and I don't have to include them in my income. Oh, ouch. What about if my employer provides me with a car? This is fairly common with certain employees, such as salespeople or executives or James Bond. Note here that this car, the Lotus Turbo Esprit that transforms into a submarine, was provided by his employer, which is the British government. Does the use of the car generate a taxable benefit? So the answer is, if an employee uses the car for personal reasons, then the personal use of the vehicle is considered a taxable benefit for the employee. If the vehicle were to be used entirely for employment purposes, it wouldn't really generate a taxable benefit, but this is so rare that we're not really going to discuss it here. If you want, you can have a look at my video on how to calculate the benefit if you want to know more, and you should at some point. So what constitutes personal driving then? Personal driving is any driving by an employee or a person that's related to the employee for purposes that aren't related to his or her employment. This would include vacation trips or any trips to conduct personal activities like eating out or going skiing or going to the drugstore, as well as travel between home and work. Yes, again, to emphasize, driving to and from work is considered personal use, as it's the employee's decision as to whether or not they choose that particular mode of transportation to get around. No one is making them drive to work. Now note that any reimbursements the employees pay to the employer for use of that car will reduce the taxable benefit that's otherwise calculated. Now, an employee may use his or her personal vehicle, right, not provided by their employer, but their own personal vehicle to carry out their employment duties, and they might get an allowance for the employment use of that vehicle. This could possibly be a taxable allowance, but that's something we're going to talk about a little later when we discuss allowances and their inclusion. Okay, that's it for this quick video. Again, note that this is not a comprehensive list of taxable benefits. There are many more taxable and non-taxable benefits that are detailed in your text. What I hope to do here was provide you with a process to help identify which items would be included in income. If you're stuck, CRA guidance would likely have pointers on how to determine the taxability of a benefit. Remember that generally benefits are taxable if they are to the benefit of the employee unless otherwise specifically excluded by the Income Tax Act. Now, even if they are taxable, they're still benefits, and I'd rather have them taxed than not have them at all.